Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. On the gold market, it's a really difficult situation stands for analysis because as you can see that in recent few weeks market is narrowing the trading range, and when it happens usually the overall performance keeps the dual nature, so it creates the background that you could treat as the bullish sign as a bearish sign. So bulls will see here some bullish moments, while the bears will see the reasons to go short in gold market. So that's typical situation when you see the price action without any significant any clear direction. Meantime, there are a few moments that we could take into consideration that maybe let you to make the decision when you would like to trade, whether you would like to trade right now, and whether the context that we have currently is interesting for trading at all. So in general, on the fundamental background, we have nothing new. We just would like to say that in a longer term perspective, currently nothing really make the hazard to the gold market and to the bullish sentiment that we have, because we will take a look at the monthly chart. You will see clear rally, strong trend. You will see that major investors keep long positions by the CFTC report. So from that standpoint, market actually stands in very tight range near the previous target. It hasn't reached even the 30% retracement on the monthly chart. And from that point of view, the long-term bullish tendency here is still valid. But in the shorter term, we suggest that market still will be under pressure, because you could see that performance of the United States economy, at least the recent data on the economy, shows improving. It is better than previously had been released. It will keep the Fed from next rate cut, and at the same time the overall inflation in the United States is not really very strong, and that also will press on the gold market. Besides, somewhere on the horizon we'll see that probably agreement between the United States and China should be achieved. And by these reasons, market still stands under pressure. And before the long-term rally will continue, market indeed could show some deeper retracement. And the combination of these factors, it really creates some confusing situation, a tricky situation on the daily chart, which it's really difficult to analyze and make the clear suggestion on the direction. So speaking on the current situation that we see here, what personally I do not like in the current price behavior. So first of all, market right now already stands below two major targets. So if you recall our initial ABCD pattern from this top, ABC top, that was an OP target. Market has shown reaction on the OP, some consolidation, and dropped lower. So market now returned right back down to the same area. So it means that it was not just ABCD retracement in upward action, as we have suggested when we talked about it. Recall that that was the point where we taken the long position with this retracement, but it was just 30% or maybe a bit greater, 50% of this drop. So that was garden steeple to buy. But now market is returning right back down. The XOP of this initial ABCD pattern coincides with the OP target of the larger pattern of this ABC top OP target. And with this larger pattern, that was the COP. It's also no reaction. Very weak reaction has followed, and market right now drop again back to this area. The same story we could say about the butterfly target. So that was 127 extension. That was also agreement with the major support here is 1448. But take a look what direction we've got. Gradual, very slow reaction on the target. That's not definitely the way how market turns up. And currently you could see that in general market shows some kind of the flat action right above the support. And this is not good sign. So every time as when we see that market creates some flags or consolidation below the resistance, that is clear sign that probably market will challenge it. As if market is calling around above the support area, this is also a sign that it could challenge it. So that's my suggestion. That is what I do not like here from the bullish point of view. On the intraday charts, yes, we have some bounce here, some reversal. Market even has realistic rubbers that have been formed here with this spike on Friday. But I would ask about this rally, how long it will last. So I suggest that really could be just minor action. So by taking a look at the hourly chart, on the 4-hour time frame chart, here we easily could recognize the triangle consolidation, guys. In the pairing of the triangle, right above the major support, brings nothing really good to the bulls, as I said previously. Inside the triangle, we have this ABCD pattern, got a steeple to sell around 1467. It's right above, right at the upper border of the triangle. So potentially this is the context for taking the short position. I got a steeple to pattern suggested minimum 30% pullback. And as you understand, what trading setups we have. First of all, we have potential butterfly pattern. So take a look, that could become the left wing of the butterfly, and that could become starting point of the right wing with a downward continuation. That's what we could get here. This is bearish scenario. If you have the bearish view, you could use this context for trying to take the short position. So what bulls could take? So with this downward action, market hasn't taken of these lows. And theoretically, as we have here some sharp reversal, upward action, maybe another context is you could try to take the long position on some minor retracement with the expectation of the upward breakout here. This larger ABC top, ABC bottom, D pattern. That's also possible. So, but to be honest, guys, these setups doesn't provide sufficient probability, sufficient context. The context that we have here, by my view, is not enough to, it's not really attractive to take the trade. It's not sufficient. Maybe it will work, but it doesn't provide really good probability of success. And personally, for me, in current situation, I would choose just sitting on the hands and see what will happen. You could trade, you could take these trades, maybe even this bearish setup will be right on spot on, and maybe it really will start dropping here, the gold market. But that's just my view, guys. That's it's a bit not sufficient, not good context for taking trade immediately. Something is still missing. So something that will give us more confidence when we're taking this trade. It's maybe a bit too much volatility around, some chaotic action in the recent view, too much reaction on some minor news, something of that sort. So some nervousness on the market that we see here, it's a bit makes blur the overall, let's call it signs and trading signals from the market. And that's what really makes not very attractive the current situation. Although, by my opinion, that I'm mostly gravitating to idea of the bearish scenario. But this is not the common sense, it's just some gut feeling. So it's just my feeling that probably market has more chance to drop rather than turn to the upside. So that's what we have, and as you understand, it's difficult to make the choice here, but if you would like to trade gold market right now, you're watching for these patients, maybe something will be interesting for you, maybe you have your own training plan. That's the things that you will have to think about and make the decision. So that's our position on the gold currently.